Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Let's continue with more tips on how to make the most of ESG ETFs for sustainable investing in 2025. Comparing expense ratios and liquidity. Even the best ESG strategy can get dragged down by high costs or low trading volume. Here's what to track. Expense ratios. Most ESG ETFs charge between 0.10% and 0.50% annually, paying over 0.30%. Make sure the fund strategy justifies the cost, like niche themes, e.g., clean water tech, or active management. Trading volume. A fund with low daily volume can have wide bid-ask spreads, meaning you pay more to buy and get less when selling. Stick to ETFs averaging at least 100,000 shares traded daily. Tracking error. Some ESG ETFs struggle to match their benchmark index. Check the 1-year and 3-year tracking difference in the fund's fact sheet. Anything over 1% is a red flag. Pro tip. Use free tools like ETFDB to screen funds by cost, liquidity, and performance in seconds. A quick checklist before you buy. Keep these steps in mind when evaluating any ESG ETF. Read the methodology. Does the fund exclude fossil fuels or just pick better oil companies? Spot overlaps. If you own 3 ESG ETFs, they might all hold Microsoft and Apple. Use tools like Morningstar's Portfolio Manager to check. Match your timeline. Funds targeting climate innovation, e.g., renewable energy stocks, may be volatile short-term but shine over decades. The right ESG ETF balances ethics, cost, and performance. No compromises needed. Top ESG ETFs to consider in 2023. ESG ETFs come in all shapes and sizes. Some cover the broad market. Others zoom in on specific themes like clean energy or workplace equality. Whether you want wide exposure or a targeted approach, these funds offer a mix of sustainability and performance. Broad market ESG ETFs. These ETFs cast a wide net, including companies across multiple sectors that meet high ESG standards. They're a solid starting point for beginners or anyone wanting diversified exposure. iShares ESG Aware MSCI USA ETF ESGU Focus screens the entire U.S. market, excluding companies tied to fossil fuels, weapons, or tobacco. It keeps heavyweights like Apple and Microsoft, but with stricter ESG filters. Performance. Up 12% annualized over the past 5 years, nearly matching the S&P 5. Why it stands out. Low expense ratio, 0.15%, and high liquidity, making it easy to trade. Vanguard ESG US Stock ETF ESGV Focus avoids oil, gas, and firearm stocks while leaning into firms with strong governance and fair labor practices. Performance. Consistent returns with less volatility than traditional funds during market dips. Why it stands out. Vanguard's rock-bottom fees, 0.09%, make it one of the cheapest ESG options. Niche ESG ETFs. For investors who want to target specific themes, like gender diversity or clean energy, these ETFs go deeper into single issues. SPDR SSGA Gender Diversity Index ETF SHE Focus invests in U.S. companies with high levels of women in leadership, from boardrooms to executive roles. Performance. Outperformed the S&P 500 in 3 of the last 5 years. Why it stands out. A straightforward way to support gender equity without sacrificing returns. iShares Global Clean Energy ETF ICLN Focus holds solar, wind, and other renewable energy firms worldwide. Performance. volatile but up 90% over the past 5 years as green energy grows. Why it stands out: directly funds the transition away from fossil fuels. Nuveen ESG Large Cap Growth ETF NULG Focus combines ESG screening with a growth investing strategy, targeting companies like Tesla and Nvidia that are both ethical and high growth. Performance: beat traditional growth ETFs by 2% annually since launch. Why it stands out: proves you don't have to choose between ethics and aggressive growth. Each of these ETFs brings something different to the table. The best one for you depends on whether you want broad stability or targeted impact, or a mix of both. Potential challenges and criticisms of ESG ETFs. While ESG ETFs offer a way to invest with purpose, they aren't perfect. Issues like misleading marketing and inconsistent standards can trip up even the most careful investors. Knowing these pitfalls helps you pick funds that truly match your values and avoid the ones that just look good on paper. Greenwashing and how to spot it. Some funds slap an ESG label on their products without backing it up. This practice, called greenwashing, tricks investors into thinking they're supporting sustainability when they're not. For example, a fund might exclude coal companies but still invest in natural gas, a fossil fuel with significant emissions. Here's how to spot real sustainability. Check the holdings. Look up the fund's top 10 investments. Are there oil giants, weapons makers, or firms with poor labor records? That's a red flag. Review the methodology. Does the ETF rely on vague terms like ESG integrated without clear rules? Strong funds spell out their screening process in detail. Compare ratings. If a fund gets an A from MSCI but a C from Sustainalytics, dig deeper. Different ratings agencies weigh factors differently. The best ESG ETFs are transparent. They openly share what they exclude and why, so you know exactly where your money goes. The lack of universal ESG standards. No single definition exists for what makes an investment ESG. One fund might prioritize carbon reduction while another focuses on board diversity. This variation creates confusion and sometimes leads to funds with wildly different holdings carrying similar labels. Here's how the gaps play out. Industry exclusions vary. Some funds ban all fossil fuels. Others allow best-in-class oil companies. Without a standard, you might unknowingly invest in sectors you oppose. Social criteria shift. A fund might screen for racial equity but ignore worker safety, or vice versa. Governance gets fuzzy. One ETF might demand independent board members, while another overlooks executive pay gaps. To navigate this, ignore the label and study the specifics. Match the fund's priorities to yours, whether that's climate action, fair wages, or corporate transparency. By staying sharp on these challenges, you can invest in ESG ETFs that deliver real impact, not just marketing hype. Ready to start. Research the funds mentioned here or talk to a financial advisor to find the right fit. Sustainable investing isn't just about feeling good. It's about making choices that pay off for your portfolio and the planet. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.